Kroger, stock ticker KR, is trading at $50.28 per share and just released their latest quarter's earnings report, and we can see they were down around 3.27% on the day. So let's go ahead and jump into those results. Now, we can see if we scroll down, Kroger beat on top and bottom line. Q1 non-GAAP earnings per share of $1.43 was a beat by around 6 cents, and revenue came in at about $45.3 billion, which year over year was actually pretty flat, but it did beat analyst expectations by around $180 million, and we can see full year 2024 guidance was reaffirmed, which is always a good news. Now, if we look at the stock over the past year, it's up by about 9.71%, and over the past 5 years, it's actually more than doubled, up about 117%. So this company's been performing pretty well, and the dividend growth has also been really good. If we jump over to my dividend breakdown sheet, we can come up here, plug in KR, and hit enter. And you can see all this data is going to automatically load in. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Now, we can see Kroger has a starting dividend yield sitting at about 2.31%. So that's a decent starting dividend yield. But again, the magic in this company is in the dividend growth. We can see a 10-year dividend CAGR of about 13% in a 5-year, really good, at 14%. So look at the rate these dividend payments have been growing. 2013, this company's paying out about 31 cents per share. In 2023, up to $1.10. And as of right now, 2024, $1.16. And they've been able to do this while maintaining a low free cash flow payout ratio. We can see in 2023 that FCF payout ratio was sitting at about 26.78%. The payout ratio as a result of earnings at about 30%. Now, if we look at the free cash flow payout ratio over time, we can see it climbed quite a bit higher than I typically like to see it in 2016 and 2017, both at about 74 or 73%. But because free cash flow grew at such a healthy rate over the past few years, this got as low in 2020 to 13.52%, and it's climbed just a little bit, but again, a 26.78% free cash flow payout ratio is very healthy. If we look at 2020 through 2023, we can see free cash flow has been substantially higher over the past few years than it was prior, contributing to that high 5-year and 10-year free cash flow compounded annual growth rate. If we jump over to the stock screener sheet, come up here, plug in KR, the data will automatically load in. Now we can see if we look at the company from a free cash flow perspective as of right now. In 2023, free cash flow per share is about $1.72. So if we take that in comparison to the current share price of the company, the free cash flow yield for the company is sitting at about 3.42%. And basically what this means is for every share that you buy of this company at $50.28, the free cash flow that you're getting on a per share basis is about $1.72. That's what the free cash flow yield means. If we look at revenue per share for this company, we can see it's actually pretty steadily grown over the past decade. In 2013, revenue per share about $90.69, and in 2023 jumped all the way up to $206.49. Now we have to understand these per share metrics like revenue per share, free cash flow per share, and earnings per share have been boosted quite a bit from this company because of the amount of shares they've been buying back. They have bought back a lot of shares over the past decade. In 2013, they have about 1.06 billion shares outstanding, but in 2023, this was all the way down to about 718 million. So they bought back over 25% of their shares during this time period. So seeing growth in things like revenue per share is obviously great, but we also want to look for organic revenue growth. We want to make sure revenue is growing without them having to buy back shares. So if we jump over to the profitability spreadsheet, you can see I've already plugged in Kroger over here. If we come over here and look at the revenue versus cost of revenue over the past decade, again, it's a similar story. Revenue has gone from about 96 billion now all the way up to around 148 billion. So they have a 10-year revenue CAGR of about 4.36%. So revenue hasn't necessarily grown at a very high rate over the past decade, but it is growing. In the past 5 years, it's slowed down a little bit more at about 3.86%. Now, if we look at the 10-year average gross profit ratio, it's sitting at about 21.76%, and in 2023, about 21.43%. So gross profit has been pretty steady over the past decade. As revenue's grown, the cost of revenue has grown along with it at a pretty similar rate. Now let's look at this company from another valuation perspective. Let's say we want to look at the price to earnings ratio. I'll just plug in KR PE ratio, and let's say that I want to look at it for 2023. We can see in 2023 that price to earnings ratio was sitting at about 14.41, but if we quickly jump over to Seeking Alpha, we can see that forward-looking price to earnings sitting at about 11.73, so it looks like it's trading at a little bit of a healthier valuation as of right now. And when we look at the 52-week range, it looks like they're trading right in the middle. They had a high of about $58 a share and a low of around $42 a share. Now, if we look at some recent news surrounding Kroger, they did recently announce they would be attempting to have a merger with Albertsons companies. And according to Kroger's homepage, this is something investors should be excited about for a few different reasons. They do expect it to help top and bottom lines, obviously, and they also expect it to boost earnings in the first year, excluding one-time costs. But it's important to keep in mind this merger is not guaranteed to happen. We can see the FTC has challenged Kroger's acquisition of Albertsons, and their claim is that this is the largest supermarket merger in US history, and this would eliminate competition and raise grocery prices for millions of Americans while harming tens of thousands of workers. Whether or not that's actually true, I'll let you decide, but you do need to keep in mind this merger is not guaranteed to happen. So there you go, there is a quick analysis of Kroger's and their recent earnings report. Go ahead and let me know what you think of this company in the comments down below, and like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.